I'm the owner and founder of Your Market, Your Money. We're going to take a look at some Abletrend charts here. It's May 1st. It's 4:18 in the afternoon, and here on the Pacific Coast here in Las Vegas. Okay, I'm going to show you this first, a risk disclosure. Futures and Forex trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so you can read here what it says. And investment in any market is money or a capital that you can afford to lose without affecting your daily finances. So, okay, hold on a second here. Okay, what we're looking at is we're going to be looking at Abletrend. This is Abletrend from the Abletrend Corporation, the company that provides this software. Is this company right here, Abletrend. Now, I do not work for Abletrend. I just do the reviews. We look at the charts every day after the market closes. If you want to take a look at them or go to their website, it's wintic.com, wintic.com, and you can look over and take a look at their software and see what their prices are and what they have to offer. But the charting software that you're looking at, it comes from them. That's what you're looking at. Okay. All right, we're going to start. We're going to review 3 contracts. We're going to review crude oil. You can tell it's a crude oil contract because if you watch my cursor, go up here, you have the contract symbol for crude oil in futures is CL. You see it here, CL. And then if you come down here, in the workspace, I have it marked as CL. So if you see CL on the chart, that's crude oil. That is the world's top commodity. Okay, if you watch the market news like I do every day, it's right at the top of the list. That's all they talk about is crude oil prices, the economy, what drives it, and all that. Okay, let's take a look at this real quick. Okay. Here's where the New York market opens, right here. New York market opens at 6:30. In futures contracts, especially in this contract, the best time to trade this is during the New York market open. Okay, so you might hear that you can trade futures 24 hours. Well, that's true. But this particular contract, you trade it when the market's open, when the New York market opens. My time out here is 6:30. If you can see it down here where the cursor is, 6:30 here in Las Vegas. It's 6:30, but New York time is actually 9:30. So I'm looking at 6:30 here. It's actually 9:30 on the East Coast. So this is right. This is when the market opens. Okay, let's take a look at the first trading opportunity. Okay, we have a sell signal here coming in around 7 o'clock. 7:01, you have a sell signal, but you have a no trade zone. You do not enter any trades because you have blue X's down here. You see these blue X's? You do not trade when you have blue X's and you got red dots above, you do not trade. This is a no trade zone. You do not get into any trades. So let's see where the best possible entry point would be. Best entry point would actually be on here. Best entry point would be about right here. Okay, and that is at 7:22 my time, 10:22 on the East Coast. If you notice, this is where the signal comes in. This is the signal. You got a big red dot, red bar, and a small red dot. But like I said, this is the no trade zone. You got to wait until there's no blue X's, and that would be about right here. Market pulls back just a little bit, so I would get in right here. This is where I would get in. So let's just mark that. I'm just going to mark it. Now, I like to draw on my charts and make notes for reference. Okay, so you get in here. Okay, well, you're going to sell. You're going to sell short. General rule of thumb: one contract, no more than one contract or one lot per 1% of your capital. So if you have $1,000 in your account, you're only going to trade one lot or one contract. That's usually general rule of thumb. Okay, so we get in here, we start to trade. You're going to stay in. You're going to stay in. You're going to stay in. I got a really long bar here, which usually indicates the market's going to snap back on you. Snaps back a little bit, comes back up here. You're going to get stopped out. Comes back down, goes back up, goes up to here, touches the support. She comes down, and you're out here. So you enter here, get into the trade. Now you can do this trade one of two ways. You can enter here, get in here. You can exit on this long bar and take some profit if you want to, or you can ride the trade out. Depends on your risk tolerance. Okay, you're going to get stopped out, but you can get right back in. Follow the trade down. Get out. You'd get out about right here. So that's probably quite a bit of money there. I'm not going to go into figures, but let's go ahead and make a little box. My drawing skills probably aren't all that great. That's what I would have traded right there. That's a good trade. Okay. Next trade up. Next trade up would be at next trade up would be about 854. And that's what I would have traded right there. Okay. Next trade after that. You could trade here if you want to, but it would be about probably a break-even trade. This one here. I'm going to go ahead and mark this chart the way that I would trade. So okay, let's get out right there. Okay, you enter the trade. You have a buy signal at 10:24 or 1:24 New York time. You enter the trade here. Stay in the trade. You're going to get stopped out right here. Get stopped out twice, actually. Here and here. You can get back in if you want. If it were me trading on this one, I would probably get out on this really long bar, because on this really long bar, it's gonna pull back on you. See how it pulls back? I'd take profit about right here. I take profit when that bar closes out, rather than just go ahead and ride the trade out. Okay, let's keep looking here. Now you could trade here if you wanted to, but I wouldn't. I really don't like how that looks. That doesn't look good. I mean, you can if you want to, but I wouldn't. This one here, maybe. That'd be a small trade. You'd probably make a little bit there. Wouldn't make much. You see, this is the sell signal. But you have blue X's. That means stay out. So you really wouldn't even get it if you were to trade this. You wouldn't probably get in until about. You get on this bar here if you wanted to. And you wouldn't make much. Okay, and that's crude oil right there. There's the end of the day. Market closes at 4 o'clock. That's about right here. Let's take a look at the ES, the E-mini S&P, which is very popular. Okay, let's see here. Okay, here we have a sell signal at 5:42. That would be 8:42 Eastern time, so that would be roughly 20 minutes before the market opens. So you have a sell signal, but you don't get in. You got blue X's, you stay out. You could wait till the next bar. I would get in. You can get in right there if you wanted to. I'm just going to mark that. I like drawing on my charts. Okay, so you end the trade here. And you stay in, 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 stay in. Okay, here's when the market opens. Now, if you're up that early, you could have get in this trade. Sure, why not? If you're up earlier though, you could have got in it when you first got that signal. But this market is strictly a day trading market. It's best to trade it when the market's open. Okay, so anyway, you can get in here, stay in, stay in, stay in. You probably would have got stopped out here, but you can get back in again. Keep going out. Okay, now if this were me, I would get out on this really long bar, because what's going to happen is that it's going to snap back on you. As you can see, it's going to snap back. You could ride the trade all the way out if you wanted to, but if it were me, I'd probably take profit when this bar closes. So this bar is just about to close. I'm going to take profit, and then, you know, that's it. So you could trade from here. If you're up early enough, you could trade from here to here, or you could trade from here to this point. You're still going to make quite a bit of money. I'm not going to quote numbers, but that's a lot. Okay. Perfect example of a no trade zone right here. You have blue bars. Everything's in agreement. Here's the buy signal, okay? But you got red X's up here, so you stay out of the trade. You do not trade when there's red X's. You have opposing colors, you don't trade. You trade when everything's in agreement. So I would get in on this trade. I'd get on this trade. Hold on here. How about right there? Let's just mark that just for reference. Like I said, I like doing that. Okay. So you get in on the trade here. Stay in, stay in, stay in. It'll pull back a little bit. Here you're going to get stopped out. So you'd make a little bit, not much. Maybe I probably wouldn't call that a break-even trade, but it's pretty darn close. So the way you look at this is that this is your stop loss. This is where you get stopped out. Okay, and then you're just out of the trade, so. All right. This is the ES. Okay, here's the sell signal. Sell signal comes in at 8:58, which is 9 o'clock here, which is 12 o'clock New York time. You do not get in because you have blue X's down here. You do not get in until you get in right there if you want. Mark my charts. Like I said, I like doing that for reference. Let's take this out. Okay, so you get in the trade here, enter the trade. You're going to stay in, stay in, stay in, stay in, stay in. It's going to pull back a little bit. You're not going to get stopped out because your stop loss goes right here. You're going to stay in the trade, stay in the trade. If you ride the trade out, this really long bar, you see that long bar again? Take profit, get out. That's what I would do. Take profit right here. I indicated that right here, see it? So let's go ahead and mark this. Okay, so you trade from here to here. You know, that's about I don't know, like I said, I'm not gonna quote numbers, but it's a pretty good trade there. I'm gonna run through this really quick. I mean, you can see for yourself pretty much where you would get in and where you would get out, and you know, the best possible entry and best possible exit. You know, here's another sell signal. Get in, get in here, get in here. You're gonna get stopped out there, right there. It's going to be a break even. You can get back in here if you want. Right here, you can get back in. Stay in the trade. That's about a break-even trade. Yeah, however you look at that. That's, yeah. But the thing to remember is you're not going to get beat up. You're not going to lose a whole lot of money. That's one nice thing about this program. It keeps you out of trouble like that. And what I like about it is you can not only, of course, tell people about it, you can show it to them, and that's what I'm doing. So, okay, here's another sell signal at 12:24, about 3:30 New York time. So, you can get in right on the signal if you want to, or, maybe right there. Stay in the trade all the way down. And here's 1:15. Here's when the market closes. You can tell the market closes when the market closed because you see how it goes flat now. See how it just like flat lines. That's why anybody who trades this particular contract, the E-mini, the E-mini S&P is you trade it during market hours, New York market hours. I'm sorry. Market opens here, from here to about here. And the market's closed, and you can tell there's just nothing going on. You just got a flat line right there. So. Now I have access to Abletrend for about another week and a half, so I'm going to try to do daily reviews and show everybody what Abletrend's showing. This will be basically when the market after the market closes. Tomorrow is the 2nd of May. I may try to do a live session, a recorded live session, and it'll be a short session. Won't be too long like today, but okay. Here's the NQ. This is another contract. This is the E-mini NASDAQ, which is popular also. So here's when the market opens, right here. First trade opportunity would be here, sell signal. Okay. And make sure we don't have any more blue X's, and we get in right there. Get in the trade. Stay in, stay in, stay in, stay in, stay in. Stay in, stay in, stay in, stay in, stay in, and you are out. You're out right there. Get in here. Get in the trade. I don't see, you don't get stopped out anywhere. Okay, here's another one. Buy signal, you're going to buy. But you got red X's above. You don't enter the trade, stay out. Red X, stay out, stay out, stay out, stay out, stay out, stay out. Now you get in. Get in right there. If you want to, or get in on this bar. As you can see, from where you're actually entering the trade from here to here, it's not that far from the signal. But you do not want to enter the trade when you have a no trade zone. You want to stay out. So you get in here. You can tell everything's in agreement. You got a blue bar, small blue dot. Okay, so we enter the trade, stay in. This is a buy signal, by the way. So you're gonna stay in, 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 and you are out right here. You're out of the trade. Abletrend says, hey, get out. Because you now have a red sell signal. So you're going to trade from here to here. Okay, like I said, I'm not quoting numbers, but if you can look, I know you can see this. If you look at these numbers, 77, 63, 64, 65, 66, 67, these are like, this is the current price that you're buying at. You're going to buy here, and you're going to sell it here. Okay? And if you do a little bit of homework, you can pretty much figure out how much that is. Right now, I'm just not quoting any numbers right now as far as what you can make, but you can make a lot of money in this, believe me. Okay, next signal, buy signal here comes in at 10:33, 1:33 on New York time. If I were going to take this trade, I would take it. Let me show you where I would take it. You can take it right here if you want to, but I would take it here. Let me show you why. Let me show you why I would take it here. You get a signal, whether it's a buy signal. This is buy. This is a buy signal. Everybody who trades differently. They have their own trading style. They have their own risk tolerance, how much they want to invest. Right here. Okay, so the signal comes in at 10:33. This is the buy signal. Okay, what I do is I identify to make sure we're going to have a positive trend. What I mean by that is you count five. I used a 5-bar rule in futures on a 1-minute chart. You got 1, 2, 3, 4, 5. It's like what I call stair steps. See it? It's like steps. And it's a positive trend. I call it a positive trend. A neutral trend is where you have green bars and it's going sideways. So I wait 5 bars. Well, 5 bars is only 5 minutes. That's not going to kill me. And you get in here, you get in the trade, you stay in, stay in, stay in, stay in, stay in, stay in, stay in. A little bit of pullback. She comes back, and you're out right here. Actually, I would get out on the 3rd green bar, which is right there. And that's a good trade. Here you have a sell signal, but you got blue X's below. You stay out. You do not trade. This is what we call a no trade zone, or what I call an NTZ. Okay. Now you could get in here if you wanted to. You could trade this if you wanted to, but I wouldn't. And let me tell you why. Because you could get in here, but you see how far it is from the sell signal? From this sell signal to the time you get in, it's too far. And the trend only lasts just a very, very short while. Just like a few minutes, and then you're out. You get stopped out right here. I wouldn't get into that. But that's just me. That's how I trade. Everybody trades differently. We've been doing this for a long time. Everybody has their own technique. They got their own trading style. Like I said, they got their own risk tolerance. And they have an idea. They already know what they're going to do. So now this one would be a really good trade here. This is a buy signal. Blue is buy or going up. And then red is, of course, going down. But anyway, On this one, I would get in, count 5 bars, 1, 2, 3, 4, 5. I would actually get in here using the 5-bar rule. And that's only in futures on a 1-minute chart where it says 1 minute up there. You can get in, get in, get in, stay in, stay in, stay in. You see this huge spike? See this really long bar? Okay. You don't see that, a bar that's really, really long like that. You don't see it too often. You see it every once in a while. But anyone who does this for a living and professional traders, they would get out. When this bar comes to about maybe right up here, you're out. You're out of the trade about right there. I'm going to mark it if I can. Get out about right there. Because it's going to retrace. It's going to come back. And you're going to give a little money back. You're actually out of this trade. You got 2 choices. You can either exit right here, or you can exit on this 3rd green bar. So it's up to you to what you want to do. For me, I'd exit right here. Take maximum profit. And right there, that's quite a bit of money right there. Like I said, I'm not going to quote numbers. Okay, and then, well, we got markets closed. Market closes at, let's see, 1 o'clock. Market closes about right here. But you can tell the market's now closed because you just got a flat line. Look at this. It's just flat line. See that? There's no price movement at all. It's just completely flat. So, you know, you can hear people say, you know, trading futures is 24 hours. That's true to a point, but when you're talking about these 3 contracts, you're talking about the CL, which is crude oil, the ES, the E-mini S&P, and the NQ. Okay. The ES right here and the NQ are referred to as stock indices. That's what we call them. Stock indices. Okay, I'm going to wrap this up real quick. Like I said, tomorrow I'll show you another, we'll do another review tomorrow. Let me get back to where I was. Oh man, okay, so like I said, alright, so the market opens here on crude. And I've made some outlines here to where I would trade, what I would do. Up to the time the market closes, so. Okay, so anyway, let me show you a few things here before I gotta go. Okay, like I said, this charting program, this is called Abletrend. It's been around for 26 years. It came out in '94. I first saw Abletrend, if I'm not mistaken, I'm thinking back here, I first saw it about '97, I think, which was 3 years right after it came out. I've known about this since about '97. It's 20 years, 19 now, so that's like a long time, like 23 years I've known about it. So it's been around a long time. But like I said, you can go to wintech.com, check it out, take a look at it. The gentleman who does the webinars, Ron, he's a really nice guy. He does webinars twice a week if you want to sign up for his webinars. They're on YouTube, and you can take a look at those if you want. If you want to try your hand at trading, if you want to try a futures trading platform, you can go to Infinity Futures. I have an account with them. You can register with a demo practice account. I would highly recommend that before you start trading real money. All they ask is like a first name, last name, phone, and email. That's really all they ask you for. They don't they don't ask you for your social security number. They don't they don't ask you for any credit card information. So that's what it looks like. It's not that hard to use. In the future, I hope to open a trading room using Abletrend along with the Infinity Futures trading platform in real time. So that's what I'm planning on doing a little later on down the road. And then I'll start getting with people that I know, friends and family, who want to attend my trading room starting at probably 6 o'clock out here, 9 o'clock New York time. And that should work out pretty well. Okay, well, I'm going to get out of here. I got a couple of things I got to do. I'm going to close out Abletrend here. If anybody wants to get a hold of me, ask me any questions, you can send me an email at my Gmail email account that I use just for trading. YourMarketsYourMoney at Gmail. That's me. So, all right. Well, hope everybody's enjoyed watching this, and you send me some feedback if you want. I'm gonna finish this recording, and then I'm gonna upload it to my YouTube channel, which is Your Market, Your Money on YouTube. I created my own YouTube channel up there. Yeah. Well, just give me some feedback and let me know what you think, and we're going to get going here. So, all right, well, everybody have a